My name is Lisa Niser, and I'm a tax advisor and financial educator. What does that mean? That means that I do individual tax work, i.e., preparing tax returns, mostly for entrepreneurs, real estate investors, law partners, and the like. I only focus on individuals because I think they're the most appreciative, and I have more than enough work doing it. Um, but the part that I really like is the tax planning and education because all of us interact with money every day and we're really not taught about it. And that's really stressful. So I love doing that. A tax return is very reactive. And so I like to work with my clients to help them understand how the taxes work and their money works so they can make what I call informed decisions. And that's really where my focus is. So I'm very excited to help you learn a little bit about tax. So one business expense that I often see taken is a home office deduction. And in order to take that, there are two requirements. One is that you have a space that's used regularly for business, and two, you have a space that's used exclusively for business. Now, most of us can take that regularly because we're always working, but the exclusivity is the one that the IRS really looks at. Now, years ago, when they first started doing the home office, I actually was able to get through to someone at the IRS and I said, well, so how do you audit this? And they really look for exclusivity. So they suggested that if you do this, you take a picture of the space every year and toss it in with your other tax documents so that you can prove it. They are looking for things like a guest couch, you're at the dining room table, you have exercise equipment in the room, you share a room with somebody else. So it really needs to be an exclusive space. And if you do that, you can claim either the business square footage percentage, so whatever the square footage of the room is to the square footage of the whole residence, that percentage of your rent, or that percentage of your mortgage interest, property taxes, utilities, insurance, etc. So that's a big one. Another one is qualified business income deduction. Sometimes you also hear it known as Section 199A. And what that is it allows business owners to take up to a 20% deduction on their federal return against their federal income tax. It does not reduce the amount subject to that self-employment tax, which is your Social Security and Medicare taxes, but it does reduce your federal income tax. The way it's calculated is it is your net profit from your business less the adjustment for half your self-employment tax that you'll find on Schedule 1, less any retirement plan contribution, and less any self-employed health insurance deduction times 20%. However, if that number that you multiplied by the 20% is higher than your taxable income prior to the deduction, then it's 20% of that number. So sometimes if you just have business income and you take even the standard deduction, you're going to end up with a lower number that you take the 20% on. And that was done to help business owners that are not corporations benefit from the lower corporate tax that was put in place as part of the 2017 tax reform bill. Another one is subscriptions. So if you need subscriptions to things like Zoom, LinkedIn Premium, professional writers organizations, things like that, those are all deductible, as are publications. So if you have to subscribe to things to get information, stay up to date, business memberships, licensing, those are all things that you're going to see a lot. One thing I would recommend now, if you haven't already done it, is go through your credit cards and your bank statement and make sure you have a physical receipt for anything that you are claiming as an expense. The IRS wants to see actual receipts, not just a credit card statement. Another one is self-employed health insurance. So if you work for yourself and you have to pay for your own health insurance, that is deductible. It is not deductible on the Schedule C. It's deductible on Schedule 1, but you get to deduct that in full up to the amount of profit you had. So if you didn't have a profit, you can't deduct that. Another thing would be equipment such as your computer, potentially your cell phone, and things like that. Those are the biggest ones that are kind of nice and relate just to people that are self-employed. So the biggest thing that I think is often overlooked by freelancers is those retirement plan contribution opportunities. What's really nice about being self-employed is you can open a SEP IRA and contribute up to almost 20% of your net profit to it, and it's tax deductible for federal and state purposes. That amount also can be contributed up until the due date of your return. So that's really, really nice. You can decide once you see your cash flow what's going on. No matter how much you contribute, even if it's just a small amount, I really encourage you to set some amount aside because it will just pay off in the long run. Another thing is to um, make sure that everything that you have is separate. If you're going to run a business, you need to run it like a business. So have separate bank accounts, separate credit cards, keep all your receipts separate. That will just set you up for success. Another thing is to invest. So invest in a tax advisor. I'm not sure I would invest in a tax preparer, but if you invest in someone who's a tax advisor, I think that the knowledge that you will gain will more than make up for whatever you pay, and the reduction in stress will more than make up for whatever you pay. And if you have a lot of transactions, also consider investing in a bookkeeper. They are not inexpensive, but knowing where you're at, not just for tax purposes, but throughout the year so you can make good informed business decisions is just priceless. Taxes do not have to be scary. I think they're scary because we don't understand them. So just investing in knowledge, whether it is in taxes or whatever you're pursuing, I really encourage you to go for. Being an entrepreneur is not easy, but it is worth it. But you do have to put in the time, money, and energy. So those are the couple things that I really encourage you to look into now. I do have a program called What Entrepreneurs Need to Know About Taxes. It's $197. You can find it at www.takingontaxestogether.com. And it includes a 50-minute on-demand video followed by a 1 hour one-on-one consultation. So the video is designed to give you an overview of form of business, EIN, how income is reported, types of deductions, things that aren't deductible, estimated taxes, self-employment taxes, and the like. And you can pause and replay it as needed because I know that it gets really overwhelming. And then once you have questions, because oftentimes you don't know what you don't know, it includes that consultation. So you can ask me the questions or have me help you with estimates or things like that. In addition, on my website, www.lisaniser.com, there is a newsletter sign up at the top. It's not a weekly newsletter. It's sent out when there's information to share. So any really important tax updates I send, and I try and write this stuff in as basic English as possible. I get very good feedback on there. So you can sign up there. And I do post on LinkedIn multiple times a week with lots of tax information, estimated tax reminders, all kinds of things. So if you're on LinkedIn, I would love for you to connect. Just shoot me a connection request at Lisa Niser and let me know where you found me from. And I would love to connect with you and support you and learn more about you. So thank you again for having me here. I love working with entrepreneurs and helping them have a life that they want. I love being an entrepreneur. I've been an entrepreneur for 20 years and I think it is great. So good luck. I look forward to supporting you however I can, and hopefully we can connect again soon.